So here working in California, kind of in the Bay Area, I tend to work with a lot of medical professionals, a lot of nurses, to be more specific. And one thing I've noticed over the years is that a lot of times we'll have the buyer there at the development. I work at the developments on the weekend, the new construction developments on the weekend. So we'll have a buyer there. They're looking to buy with zero down, no money down. And while we do have the programs where you can buy with no money down, the only, I would say, awesome program that's available with zero down is a VA. So if you're a veteran, boom, it's awesome. If you're not, most of the zero down programs are going to have a caveat. There's a trade-off. So it's that down payment assistance that you're getting is typically coming at a cost somehow, right? In most cases, it's going to result in a higher mortgage payment. So with the nurses, so often they don't even realize that they have funds in their 401k that can be used towards their down payment. And so when we kind of uncover that and look at what they can do, they can withdraw funds from 401k, no penalty, because the funds are being used for the purchase of a home. They can also take a loan in some cases from their 401k that they pay back themselves. So it really just depends on how much money they have in there. If they've been a nurse for 5 years or more, they'll typically have enough funds in their 401k that they can use that for the down payment on FHA or conventional purchase. So it's one great way that many of our home buyers, especially our nurses, are able to purchase a home with some down payment, but with down payment from their own source. Now, to add to that, we are all seeing a drop in the stock market. We're seeing a drop in our own investment portfolios. And so I think it's important also, if you want, to look at the investment opportunity and comparison. Because if you're renting and you just have a bunch of money sitting in the 401k, it's not doing much right now. Those same funds put into real estate are probably going to help out much more in two ways. One, that's your housing expense. And two, there's a return on investment on the purchase of your home that is increasing based on the appreciation, not of your investment, but of the value of the home. And so let me elaborate. Let's say the nurse is buying a home for $600,000 and down payment is 10%, so $60,000 down payment. The average appreciation is 5 to 10% per year, but let's use the super bland, very low appreciation rate of 2%. So 2% per year for a $600,000 home. After 5 years, that total appreciation would be $60,000. It's $12,000 per year, 5 years, $60,000. So a $600,000 home with $60,000 investment after 5 years will return $60,000. It's a 100% rate of return after 5 years on your investment. And the reason for that is because the appreciation is off of, it's not like we're getting appreciation or interest off of the $60,000 investment. No, it's based off of the appreciation of a $600,000 home. So 60 turns into another 60 in 5 years. Where do you see that? You don't see that with 401k. So if you're still boggled and not wanting to pull funds from a 401k to purchase your home, think of that, because that's also a way that you can kind of look at your return on investment on the purchase of a home versus, and you can easily check the return on investment on your portfolio. Just go online and look at it. It's probably negative right now. If it's positive, it's small. But this is another way that you can buy your home, kind of have your cake and eat it too. All right, see you on the next one.